It's a classic day trade. I feel like a developing trader on the desk right now, like learning about trading, because these are the kind of trades that SMB teaches because they're so effective, they're so powerful.
The exact thing you want is to just wait for a trade to slap you in the face and wait for an easy money trade. And this really was that.
I was in reset mode, and this was the perfect trade because it kind of just fell in your lap. Welcome to the Trading Desk Podcast, episode 2. I'm Garrett Drinen. I'm here with my partner, Tim. We're your hosts, and we're here with Kurt, who's always the guy behind the curtain doing Wizard of Oz stuff so that we can make all of this happen. Look, first of all, I'd like to thank everybody who watched episode 1 last week, and for everybody who provided feedback. I mean, we got some really great feedback, some really great pointers, some encouragement, because we're really just trying to figure this thing out as we go. Like Tim said, we didn't major in podcasting in college. So, any kind of comments or feedback from all of you is actually really helpful, because I know that many of you who see these videos have been with us for a while. You watch the YouTube videos, you know the deal, right? So we're trying to improve on this process as we go. So with that said, Tim, what do we got today?
We have a fun one. We have a biotech day one catalyst breakout in QURE. And it's good to be back. Excited to talk about it.
Yeah, this trade is so interesting to me from the single point that it's a classic day trade, right? It's like one of those trades where I just think when I made this trade, we both actually traded this. I was thinking like, this is like, I feel like a developing trader on the desk right now, like learning about trading, because these are the kind of trades that SMB teaches because they're so effective, they're so powerful. They occur a lot. And so, we'll get into all of why that's the case, like why this is such a classic trade. But just kind of starting out, like, let's just kind of break this down a little bit. We're talking about a biotech stock that had a huge catalyst on day one. And we're talking about trading that stock on day one to the long side as it breaks out of its opening range that it developed for quite some time in the morning. So to really set this up, we need to kind of go back to the pre-market and to the beginning of this trade, right? Because when we come in the morning, we didn't even know this stock existed practically before we started looking at the news and kind of looking at our scanners and stuff like that. So, Tim, you want to kind of take us through when we came in that morning? Like, how did we even find this stock?
Definitely. And I've never traded QURE before this day. Just to, talk about stocks in play. We were new to this ticker on the day. So it gaps up massively. It gaps up almost 200%, 188%. And just to start, Kurt, do you want to bring up image number 1? QURE is interesting. It's a biotech gene therapy company, IPO'd back in 2014. I believe it was founded in 1998. And as you can see on their website, they are the first in the Western world to have an approved gene therapy. That was back in 2022 for a hemophilia B gene therapy. Their pipeline right now is this AMT 130 drug or gene therapy. I don't know. I'm going to call it gene therapy. I'm not a doctor, but that's the farthest along in their pipeline. And they had news on their AMT 130 drug. They also have some other drugs in their preclinical phases, and they have one that is in phase 1. So on this day, the trade occurred on September 24th, just last Wednesday. They had their data on a study for this AMT 130, which is a gene therapy for Huntington's disease. It showed positive top-line results where this gene therapy showed a 75% slowing of the disease, which is very significant. So Huntington's is a fatal disease right now. There's no cure. And before this gene therapy by QURE, there's not been any drugs that actually attack the underlying disease. There's only been drugs that helped with alleviating the symptoms of it and kind of making it more comfortable.
Like we're trying to break down this catalyst and like being complete morons trying to break down this catalyst. Like we're not doctors, we're not PhDs, we're traders, right? Like we may know a lot about trading, but like I don't know what these treatments are, right? And that's going to be the case for most of us trying to get through this, right? So
Exactly.
like the first thing is like we're not like when we break down any catalyst, right? We could even talk about last week when we talked about the Ethereum breakout, right? We're going through that whole story. Like we're traders, we're not analysts. Like we don't have to necessarily be exactly right about the story like 2 years down the line. We're trying to put the pieces together based on these catalysts to try to figure out like what are the other market participants going to do? What are other types of market participants thinking, and like how could that move the stock right now on our time frame, right? So as we're trying to piece this stuff together, we're trying to look for clues of what is this catalyst? Why is it significant? And then trying to translate that somehow to the growth of the company, the growth of the stock. Where is it trading now? What's this mean for revenue, right? And so
Yes.
one of the things that Tim just said that really jumped out at me, like if we were reading this right now, basically going through exactly what Tim said, was that prior to this, all of the Huntington's disease, which is a really common disease, had actually like all of the treatments for it seem to alleviate the symptoms a little bit, like make it a little bit easier to cope with, yet that they don't actually improve the degeneration of it, right? They don't actually solve the problem or take a step towards actually curing this particular issue. Is that correct, Tim?
Exactly.
So that's a big deal.
Big deal. And that's one of the big takeaways when you just look at the headline, you realize they're on their own. There's really not any competition out there for slowing Huntington's disease. And then, like you said, we're really trying to see how much meat's left on the bone here. How much does this equal in future revenue growth in market cap right now? And we're trying to just get an idea. Again, we're not sell-side analysts. We don't cover biotechs. Never traded QURE before, but we're trying to interpret this as best we can in the pre-market when we see this gap.
All right. So what else did you find here?
Yeah. So it was gapping up 188%. Just want to reiterate that point because that is a massive gap.
Yeah.
Like
so
we don't see that.
It opened at like 14 and gapped to 40. Is that
Yes.
the case? Right. And it ran intraday to about 50. So yeah, like just to kind of point out like the magnitude of this move and the kind of thing we're looking at. And you can see the volume there that came in, just huge interest on this day. So, clearly this was a big deal, and you can see that after the fact. And I think what we're trying to do in the pre-market is figure out if this kind of thing is possible, right? So, all right, go ahead, Tim.
And yeah, this type of gap and day one runner, you don't see all the time. So it really does help to have some kind of conviction based on the valuation, based on this catalyst. And we weren't alone on this one. What really caught our attention in pre-market, you see the gap. It did the gap with volume. It was like 7 million in volume in pre-market, which is a ton for QURE. But then we see Martin Shkreli tweets about it, which is pretty interesting. And Kurt, if you want to bring up image number 10, let's see that tweet. So this is in the pre-market before the open. He says that QURE could go 5 to 10x from here, which Garrett, that's pretty crazy after gapping almost 200%.
Right, so he's talking like from 40, like from where it was trading in the pre-market. Yeah. And Shkreli, I mean, for those of you who may not know Shkreli, he's a biotech expert. He knows a lot more about these types of catalysts than we do. And he's cut his teeth on this kind of stuff, right? So he's got an opinion. Who knows? Like he might be pumping his own book. You don't really know, but at the same time, that's interesting, right? A lot of people are going to see that tweet. That's what I'm thinking is like, I don't even know if he's right, but like there's a lot of traders that are going to see that. And now QURE is on everybody's radar.
Exactly. And that sort of tweet gets me interested. It's like, yeah, let's see if he's crazy or if that's actually where the valuation would put it if this gene therapy were to get approved.
Yeah. So how'd you figure that out?
So, and I will say some of this was done after the fact. and not all done in the pre-market, but this is the sort of work that we do on Catalyst. So it's fun looking at the valuation. So here, let me pull up our valuation cheat sheet that you can use ChatGPT with or any AI. I always recommend kind of doing that. It's the most efficient way to get information fast, especially when you're not trying to be an analyst. But Kurt, you want to bring up image number 3, and we could check out the valuation. So with this, we're trying to get an idea, if this gene therapy were to get approved, what would its market cap look like? And we're using comparable companies, comparable pricing to try to get a gauge, as well as how much market share that we think that QURE can take in the overall market for Huntington's disease out there. So the first step is looking at the patient pool. So these are all estimates. Again, not a doctor, not exact math, but around 100,000 are eligible for this gene therapy. So 100,000 people with Huntington's, and looking at similar gene therapies, also looking at QURE's approved gene therapy in 2022, which is priced at $3.5 million. We estimated a range of $2 to $3 million per treatment. So then the estimate looks at the market share. So you can kind of see in these revenue scenarios, if they take 10% of the market share, that would be 10,000 patients treated, an average cost of $2.5 million, which would lead to $25 billion overall in revenue. And then Garrett, you can kind of see if it was 20% and if it was 30%.
Yeah, and like 10% is probably pretty conservative in this case. And obviously these are massive estimations, but it just gives you kind of a feel for where the stock, like even if it's appropriate to be trading at 40 right now after trading at 14, right? And you can kind of see that it is like the low end of this range is kind of saying like 40, and the high end is way beyond 40.
Yes.
So now all of a sudden, who knows where it should be in there? Like that's not exactly what we need to figure out. But what we do know is that like best case scenario, there's a lot of headroom, and like worst case scenario, it sounds like the gap is pricing it like pretty well, right? So if we see a long setup, hey, there might be people interested in this stock that want it for different reasons, right? Like know a lot more about these biotechs than we do, and are actually accumulating this because of, on a higher time frame, and they might be buying it over multiple days, right? And we're just talking about an hour. So when we see those bids, when we see that volume come in, and we actually see, like, let the stock show us that it wants to go higher, because that's where we come in, reading the tape, reading the chart. We have this catalyst as fuel, like in context of our trade, so that we might be able to risk it up a little more, because we feel that, okay, like it's appropriate that this is getting bought, and we're seeing that it is.
Exactly. And just to round out the math, because I love the math, once you get the revenue, the way I was kind of like prompting it was then trying to take comparable biotechs to see what they trade on their peak revenue. So that was around 2 to 4x their peak sales. So using that, we kind of then got our 3 scenarios of the market cap. And based on where QURE's market cap was, which is approximately 3 to 4 billion after the gap, you can see that what Garrett was saying is true, where this gap, one, isn't overvalued. It most likely is undervalued. And that just tells us the big question of there's still meat on the bone here. And like Garrett said, we want to look for those intraday patterns.
Yeah, and after doing some of this work, like I would never just go buy it. Like that's not what we're saying.
Exactly. Don't do that.
And you could. I mean, I guess that could be someone's playbook. Like if your main edge is this calculation, like you might be going in and just buying it, right? But you might be doing that with a much wider stop. You might be buying it over a number of days, right? You might be a fund, you might be a biotech specialist, but as traders, this just becomes, of course, just a piece of the puzzle. So we're thinking, okay, cool. To me, honestly, like this just puts it at the top of my watch list. we just did all that work just so that I can know that it's going to go here on my screen, and I'm going to make sure that if there's a long setup, I'm not going to miss it. That's probably for me, like that's the biggest difference that all that digging just made. And then of course, when we do see that setup, like hopefully I'm accounting that into the risk that I'm putting on the trade.
Yes, exactly. And that's all it did on that day. I remember that just became the top idea. And we were like, let's see if there's an intraday trade.
All right. So we're watching this thing in the pre-market. This just shows a 2-minute chart. In the pre-market, you can see that it was trading around 14 the previous day. It's now going to open around 40, and it's in this range. Probably, what is that, like a 10-point range? And it's holding, right? It's holding well. And what are we thinking right now? Like, because honestly, I didn't even know if I was going to trade it. I really didn't. We started talking about this catalyst to the team because we'd done a little bit of work on it. We found the stock. I know Shane was really interested. It sparked some interest. And I think every time that kind of happens, and people start kind of galvanizing around an idea, like it kind of reinforces your interest in it, and you get watching it because now there are other people who you trade with who are watching it closer. They might see some things on the tape that you didn't see, and the conversation starts. So we're coming into the day and seeing this thing trade, and I just have it on my screen, and it's one of those things where, like, for me, like, I just want to let it come to me. This is the kind of trade where I don't know if anything's going to present itself. Maybe it opens and it's the messiest trader that I've ever seen, right? Maybe the spread is $5, and I didn't expect that because of the volume that it was doing in the pre-market, which actually we should talk about, right? Because that's one of the ways we find these kinds of things. So, Tim, talk about the volume scanner that we use and how significant this was in terms of volume.
Yeah, so we have a percent of AVOL pre-market scanner that we built, and that was one of the ways we saw this QURE trade. So if you don't see the headline, maybe you're not like actually seeing that news break or seeing it after the fact based on the gap. You can have a scanner that basically looks at the volume done in pre-market and compares it to its average daily volume. So this one with QURE, average daily volume was 1.3 million, and it did over 7 million in the pre-market. So 5x its AVOL, which is just massive, like insane. Like,
I mean, that is insane. Like, you never see that.
Because we've done it with earnings, and like those we've looked at as 20% significant. Like if you have a 20% of its AVOL on an after hours or pre-market report, we're interested in it.
20% or earnings plays are usually one of the biggest volume events in the pre-market or after hours. And like Tim said, we'll look at 20% is like kind of a bare minimum of like, this could be good. If it's 50%, 80%, that's really good. That's extremely significant. This was, what was it? 500%?
Yes.
Yeah. So that's off the charts. And so, I mean, that's basically telling us there are a lot of people interested in this already.
Yes.
Maybe that gives a little bit more weight to the catalyst in terms of it's probably going to take a extremely significant catalyst to put 5 times its average daily volume into a stock in the pre-market. And it's also probably going to trade more liquid than it usually does, or that than we can expect, right? So I was just talking about the spread. I'm probably thinking it's probably going to be a good trader. It's probably going to have a tight spread. It's going to be very liquid. All the more reason to be watching this thing. And that's also how we'll find these, because we'll sort stocks by the percent AVOL that they're doing, like Tim said, and this certainly showed up there. So we're moving through the pre-market, and I think we got a message from Kyle on one of our other teams, because he was looking at this and he sent us an analog to a different stock that he thought would trade the same way because it was a similar biotech catalyst and a similar type of stock. Do we have that chart that we can put up?
The ABVX, yeah, Image 11. Yeah, I remember him sending it. And Kyle, he's on our team. He does a great job always just finding similar historical examples just to add conviction to the trade. So this ABVX was pretty interesting because it happened middle of July. They gap up huge, over 500% roughly on a, basically they got added to a medical conference, but it's gapping up massively, and it trended day one and then went on to trend on the higher time frame for the coming days. Like I think it was about a good like month afterwards.
When he sends something like this, like what's going through your head? Like what are you getting out of it? Because sometimes I don't even know what I'm supposed to get out of it because they're seeing something that I'm not seeing.
So when I got the message, when we saw it, my initial reaction is we had a similar gap up in a biotech that was able to trend day one, even after a huge, massive gap. The other parallels, it did a ton of volume. And that just has me again, like going back to the question of like, how much meat's left on the bone. But I would say that's kind of where my head initially went. It's nothing exact about the intraday pattern. This was an interesting one though, where if we're talking about like what we're thinking going into the open, ABVX is our analog. And that day one, as you can see in the chart, like it just held up in the morning. It opens, it holds up, and then it made a move in the afternoon and closed strong. So going into the open, I'm kind of thinking, this might not be something I want to press right off the open. Let the setup come to me. But it has potential.
That's how I'm going to attack a lot of these big gaps, right?
Yes.
Kind of let them trade off the open, find a range. All right, so the market opens. Still don't know if we're going to trade it. So this is kind of where things start to come together. And this is my favorite part because, to me, this is where it became like one of those classic trades, right? And I actually remember this morning where we started to, you know what, Tim? Like I wasn't planning on trading this day. Now that I think about it.
Wait, you weren't?
No, I had taken a rip like the previous day and in an overnight and had kind of had like a little period of like a week or so of just like feeling like I wasn't fine. I just wasn't hitting it. Like it was a little period of inconsistency, and in times like that, I'm sure we've all been there. Maybe you've never been there, Tim.
No, I've been there. I know the Colorado whale and all, but no, I've been there.
Yeah, but I was in one of those modes where I was like, all right, look, like just slow down. Like you're good. Like the first half of this month has been amazing, and now things have started to feel a little bit choppier.
More difficult.
A couple setups that have been working, are no longer working for a second. And so just slow down. And if you're feeling a little dinged up, just take it slower, let a trade come to you. Don't force anything. If you need to just not trade today, that's fine. Just kind of reset, right? I was in reset mode. Yeah. And this was the perfect trade because it kind of just fell in your lap. Right. It was because it was a classic.
That's crazy. You almost didn't trade it. Do you remember that morning? What got you to say, you know what, I am going to watch this with that in mind? Like what?
Like when I'm in that mode, I'm still watching stuff because I am like thinking something might really come to me. Like I don't want to just like miss an amazing opportunity, but I'm a lot less aggressive. I'm a lot less like, let me try a feeler here. Let me try this. And I'm a little bit more like selective and I'm kind of coming in being like, it would be totally fine and successful today if I just didn't take a trade.
Yes.
That's kind of the mentality. And that doesn't always happen, but like in this case, I think that it was like the team started watching it. Like I think I put this in the chat in the morning. Right. And
I think it was you first. Yeah.
And we started looking into it. And then by the time the market opened, it was like everyone was kind of excited about it. And in that case, you start to watch it a lot closer and you start to watch the tape and then you start to get a feel for it. And then once you start to get a feel for it, it becomes it feels less risky. It feels more opportunistic. And then all of a sudden, something like that can just sort of come to you can get you out of that mindset of like, oh man, I don't want to take a loss today. Like I think I need to take a break. Like, I gotta clear my head. Like I
100%.
quickly snapped out of that because I was like, actually, this is a good op. This is a really good op. So,
it's so funny too with those moments, because I have been there. All traders go through that, where you go through difficult stretches, and like the exact thing you want is to just wait for a trade to slap you in the face and wait for an easy money trade. And this really, it was that, which I know is what you're kind of getting into with it being that classic trade, where I could think back to when we did our like SMB Foundation. And this is the type of pattern that we did there on those videos.
it really is. This should go in the catalog.
100%.
So, all right. So what makes this like a classic SMB trade, right? So like I would say like huge catalyst, day one, huge RVol, right? Meaning relative volume. And we can see that in the pre-market, like we talked about, and we can see it once the market opens. Big gap. It holds higher for a long period of time, proving itself that it's really doing a good job of holding this gap. It's not selling off. And then you see a battle on the tape, right? And like you see a battle on the tape and you see a battle on the chart as buyers and sellers kind of come together, price gets tighter, and then boom, you see the buyers win. And that's a great spot because it gives you information in terms of the direction, and it gives you great risk reward. You can really control your risk when you see that battle and price gets really tight, and then you get a directional move out of that. And that's kind of the recipe, right?
100. I completely agree. Let's take that one by one, because that was just a lot. So high RVol, the stock's in play. That's what we're looking at when you're saying that. We just want to know that this is a stock that's very in play on the day.
So why? Why is that important?
It's important because that kind of, and you alluded to it earlier, it gives us an idea about how orderly we can expect price action, and also how much we could look into reading the tape, which you started to get into there with the battle that we saw on the tape. But if it's not doing RVol, you really can't take that much information in based on the price action. It's more mean reversion. You can't really expect to be able to read the tape well and find these like specific inflection points.
You got a catalyst, so that's going to fuel things, right? And we can see that in the volume. And we're, part of being in play is having a lot of volume. And volume is fuel, right? So that if you graph it out, usually volume correlates with volatility, and so the more volume we have, the more potential for volatility we typically have in the stock. And that's really what we want as intraday traders, is volatility, especially to take advantage of those moments where price gets really tight and there's a battle, because when one side wins, you can get volatility in that direction. And that's where that big risk reward comes in.
Exactly. 100%. And with this catalyst, you do want to see a ton of people wanting to buy it. Institutions stepping in, big money. But let's talk about that battle, because that's pretty interesting, Garrett. Where was that happening? Let's go to that chart.
This is the market opening, and this is really just as we're watching and seeing it hold. This is like, let's see if we can hold the gap. All right, it opens, it kind of trades down off the open, it reclaims, makes a new high. A little sloppy, pulls in, holds VWAP, and then dips below VWAP and reclaims. And it's funny, when you're too zoomed in, like that can seem like a dramatic move. Here on the chart, I remember that, and it felt slightly dramatic, but on the chart, it doesn't look like that. But that's significant to me, right? Just in this phase of the trade where we're trying to see if it's going to hold, when we see a moment where it looks like sellers won, and they can kind of break it below that level and get it below VWAP, and it doesn't spend much time there and just immediately reclaims. Like, that's the first piece of information to me that sellers are having a tough time and that this is holding really well.
And what would that look like if sellers won the battle? Would you say, breaking low a day, and then
and
that's a different case? Yeah,
it would hold lower. It would open up to the downside. You'd probably see on the tape the bids getting taken and dropping, and
Yep.
maybe it would hold below VWAP for a while and then break lows, and of course just stay weak on the tape. But when you get kind of like a little failed breakdown like that, an immediate reclaim, like that's sort of the first piece of the puzzle. Like I don't necessarily see like a big trade yet, but that gets my attention more, to think, okay, you know what, like if this continues to go sideways and tightens up and we kind of see that battle, the buyers really could win here and we could get a move out of this range.
Yes. And I think at this point we just had feelers on. We were kind of working around the position, selling into pops, bidding a little lower, but small starter size, if I remember correctly.
Yeah, that's what I was doing, and I sometimes like to do that to get a feel, especially if it's a intraday trade where I'm starting to feel the long, but I don't really see that see it moment that we talk about. So
Yes.
I might be bidding at support, offering out into resistance, just trying to improve my price, but not at a size where it's dramatic, like it really matters. Like I'm just trying to get a feel for the stock a little bit and maybe generate like a good average price, generate a little bit of P&L. And I think mostly just getting involved sort of helps me get that size when it comes time, because I'm kind of used to the tape a little bit.
You're more keen in.
Yeah, exactly.
So it gets above VWAP there, and then that's kind of where we start seeing the battle around 40.
That's
as
right.
well.
So, Kurt, if you could please put up slide number 6. So this is at 11:30. So by 11:30, we actually get a moment here. So you can see that trend line. We can see that it reclaimed, held, kind of broke higher, and then pulled back, right? And that was really where I started watching it, because when it broke higher, it looked like it should go higher, but a lot of times it's too early. And you kind of
Yes.
get that pullback, and I'm thinking like, okay, well now like it's really tightening up here. Like it looks like the buyers were going to win. The sellers knocked it back down. They said, okay, not yet. Like the timing's not right. And I'm thinking like, we need to put in a higher low. Like this is where it should get really tight. This is where it should kind of hold where it last tried to break out. And if it does that and tightens up and breaks trend, like that could be the first real entry in the name.
Completely agree. And that higher low is significant above VWAP there.
Yeah, and so when you ask about the battle, Tim, like really what I see is, you get a down move off the open, flush, and then they stick the bid, and then they rally it, they break highs, and then that gets stuffed, and then it goes almost all the way back to lows, right? So at this point, it's very loose. Clearly, like we can't figure out who's winning here. Like it feels like everyone's losing. And then they kind of reclaim it, and then it spends a good amount of time above VWAP as it tightens up. And when it gets really tight, that's almost like this battle like coming to a point where at this point, like someone's got to win.
When you're saying battle too, it's almost like they haven't picked a direction. The stock hasn't picked a direction the whole day.
Yeah, exactly. So we really want to kind of figure out and like time when this thing's going to pick a direction. And in those moments, like sometimes you're wrong, sometimes you're early, but sometimes it really lets you control your risk to find out. And I think those become like these types of trades that are just so great, because in this case, we're risking $1 or $2. Like if we're buying this breakout here, we could be putting our stop like $1 or $2 below, to potentially make like 10 points in this name, given the volatility, given the range. And, we were kind of looking and saying like, this could potentially go to 50.
Yeah.
Why not?
That was our target.
Yeah.
It is. Yeah. Those inflection points where you can get that great risk to reward. I remember you saying to me right when I started SMB, I feel like at SMB, where it's like our job as traders is just to find high risk to reward points in in-play stocks, something along those lines. I don't know if you remember better than me, but like I like those spots where you can really control your risk. I know those pump you up too.
I do. I mean, it's great because you don't necessarily have to be right every time when you find those spots,
Yes.
right? Because the risk reward is so good. So you're able to kind of trade it, right? And kind of make the bet. And if you're wrong, that's fine. You lose a little. If you're right, you make a lot. And I love those trades.
Definitely. So at this point, what do we want to see? It hasn't broken the high yet, but it does look, it broke the trend line. You get the higher low. It looks like buyers are in control. So
Yeah,
like,
so we
is there
want
a
to see it
trade yet?
trade
Or,
that we want to see it trade up to the high, and if we're in it, like we want to see it move immediately in our favor, and the next checkpoint's the high, because that's where it could stall out, that's where it could stuff, or that's where it could break out. So to me, like that's the next checkpoint. I actually sold some there. I regretted it. I sold a little bit into the high as it kind of came off the high. So Kurt, if you could please show number 7, this kind of shows that. So
that was tricky, yeah.
Yeah, it comes up to the high and then it consolidates a little bit. And to me, that's sort of the last spot to make a decision, to maybe make a trade, right? Like if you haven't done anything yet, I still think that there's a trade there through the high.
And you're not late. I agree. Yeah.
Did you add there? Or did you?
Yes, that's where I was adding. And like, I remember I added on the new high a day, similar to where you took off. I felt a little uncomfortable because you get a quick little pullback. It looks like it might be wicking that high a day. But what's a big change of character is back when it was above VWAP and we got that little spurt higher, it kind of started to curl up. It got all the way, sold back down. This time we make a new high a day and then it holds there. It gets really tight and it can't pull back. So at that point, when it's holding, that's as I'm getting more size. And I can't remember exactly. I might have used the TWAP there too. Just a quick one, like a 10-minute one.
I'm not surprised.
I love my TWAPs.
You do love your TWAPs. I love it. You even used it in a momentum intraday trade. That's the best thing I've ever heard.
It's all about the way you design it.
So like, why do you in that moment feel like using the TWAP program?
So for me, like the idea is you can structure it however you want in terms of the time you're given the TWAP, the prices where it could get below or, where it has to be above. And for me, like I noticed right away, it's not the easiest momentum spot where like you don't get your entry and it immediately moves away from your price. So rather than try to battle it, as long as it's holding up, I want to get size as it holds up. So I want to use it as it holds up rather than all at once.
You're basically buying every 30 seconds. This algorithm's like buying every 30 seconds, as long as it's above a certain level in a certain range.
Exactly.
And then once it breaks out, you're not buying anymore.
And that's how I literally structured it, with that pullback low and then the high it made. And I was just trying to fill roughly in that range.
That's great. I actually love that. The king of the TWAP program.
People are starting to say TWAP Timmy. Get it viral.
You've got 2 nicknames now.
Oh, it's fun. It's fun. But yeah, at that point I was getting size. I believe Shane was also getting some size in there. And the biggest thing was that we made a new high and we started getting pretty tight.
Yeah, that was a good trade. I mean, I know some traders on the desk initiated their entire position there. I think some of the traders that I know didn't even make that first trade where we all kind of got some size. And I think that's fine. I think that's that break of the highs is a great trade because it's the pre-market high, it's the intraday high. I mean, it's developed a nice range. It's late in the day enough where that's meaningful. And you'd probably be hitting out if it fills that level, that consolidation, I would imagine.
Let's go back to the control and risk. So at this point, why is that such a interesting spot to be able to control your risk in a trade like this?
Well, to me, that's where it's breaking range, right? So that's the actual breakout.
Yes.
So that's the point at which we should receive the most amount of information. Because if this is going to work, at some point it needs to move away from that level and, preferably not come back there. Right? That's like the definition of a breakout. So it should be an inflection in the stock. It should be the point where we see that it's confirmed, the news is out, the buyers won and the sellers lost, and now it's going to run. So because of that, I think you can make a trade there, especially when it consolidates like that, that's fairly tight, just to see if that's the case, because often it is, right?
100%. Exactly.
All right. So, Kurt, if you could please put slide number 8 up. This just kind of shows the rest of the day and the big picture there. So it shows the first two spots that we are talking about in terms of execution. Right. And these are all 2-minute charts, by the way. And that pink dot is kind of where I trailed out of my intraday position. Right. We got up to our 50 target. You're selling some into strength. And then if you're trailing any, you might have a trend line, you might have a moving average, you might just do it based on price action. Like I saw that we were balancing there for a while, having a tough time pushing higher, and volume started to dry up a little bit. And so that's my cue to tighten my stop, and that's where I flatten my position.
I believe I was around there as well. But this, when you see the full trade too, that's why it's such a classic SMB trade. Like, do you remember like how we were looking at this trade? Because I remember all of us seeing it really well, and you coming into this day looking for an easy money trade.
I need it.
Like it. This is one you hang up on the fridge.
It is
Big dog consolidation.
It's a powerful trade, or it's a base hit. And I think it can be a lot of things, right? And like this is kind of the way I see it. And I would love for this, for me someday, to be like an absolute home run bread and butter trade. I think that for me to make this something beyond just a really good trade, right? Like we talked about Ethereum last week, right? And that's the kind of trade for me that I expect that to be like the biggest trade of my month, or a record trade for me, or something like that. Like that's my bread and butter. This is sort of you show up to work and you make a good trade kind of trade for me. I think the thing for me that would turn this into a massive trade is getting better at the context, like the type of stuff that we laid out in the beginning, and really nailing down that, because that is really what can direct us to watching these closer and understanding like which ones are we hawking. And the better we do at choosing the ones to look for this trade in, I think the more edge we have overall in this type of setup. And then you can really leverage these intraday moments that we're talking about, because it's literally the same trade, just with more size. That's all I'm talking about. It's like, how can I be bigger in this?
I'm right there with
that?
you.
Yeah.
Right there with you. Because with the catalyst, like that added conviction, like, yeah, that would have also potentially, which we could touch on it a little, but helped with the swing trade. But, you know, we do our models, we build automated models. And this setup, although it's a classic SMB trade, wouldn't be an easy model to have edge. And that just is what you're getting to, where it's important what the catalyst is, in really kind of knowing how significant it's undervalued. Because if you have a model try to take every single intraday trade that's a similar pattern, it's going to be unprofitable. But that's where that conviction really could come from.
Yeah. That, and like it shows up, like there's footprints of it, right? If you were to try to quantify this, like there aren't many trades like this doing this much volume. So that's
where you would go. Yeah, that's where we would go. I mean, it's on our to-do list.
Right. That's evidence. The order flow was great. It wasn't that hard to read the tape, but yeah, I mean, this is like, I could have been a lot bigger in this trade given how well you could control the risk. Like it was very liquid. You could hit out. It's an intraday trade. I mean, there's no overnight risk. So all it is getting more shares, risking more in the trade. And, as I make these types of trades, which, they don't come around every single day, but when they do, like that, it really is the context for me that kind of separates like my ability to turn on the gas and versus kind of just like feel it out and like make a trade. So that's something our whole team's working on that right now.
Yeah.
I think that we trade these kinds of things well, but one thing we can do a better job of is, and some of us do a great job of this. Some of us haven't emphasized it as much. And we're all kind of working as a team to get better at diving into these catalysts on a deeper level. right? Not just saying,
really digging.
not just saying, hey, this is a positive catalyst, or like, I think like a lot of traders will come in and be like, this is gapping up, it was a good catalyst, so like let me see if there's a technical setup. But to really be able to say like this catalyst is a 10 and funds should come in and this should be 10 points higher, or this catalyst is positive but kind of known and it doesn't really change the revenue, and so maybe it just sits here after gapping, or like this catalyst is actually meaningless, right? So you can grade them and get pretty nuanced with this kind of stuff. And there are some people on the desk that do that really great. Some people like make a lot of money without really looking into it, right? There's different ways to trade, but I think for us, like that can be like a real edge.
And it's a strength, I think, that we could keep really trying to grow. Like it's an existing strength that we've seen in certain other aspects. But yeah, when you're able to put it in terms of future revenue, it just helps so much in the pre-market. Like looking at this QRE at a conservative estimate, 25 billion, it could potentially add to their revenue. And that would be around 2x, like 3x at the conservative level. So I'm completely there with you, and I'm excited to keep working at these catalysts.
Yeah, and
So-
you can swing you can swing this, right? If you have
That's
a
what I
really
was just gonna
great
say.
view on this catalyst, yeah, you were about to say that. Yeah, I mean,
Yeah,
that's,
great minds think alike, man.
yeah. So like I think so. This was a swing trade. Shane took it on our
Yep.
team. I know he wasn't the only one on the desk that held this overnight. But I think there were some factors. Like I thought about swinging it. I think you did
Same.
too, right?
Yeah,
And I'm thinking to myself, okay, how well do I understand this catalyst versus just like thinking I do? And
yes.
also, what's the offering risk? Like, how well do I know this name, right? And have I looked into all these things? And I did look into, like, obviously, we looked into the catalyst. I thought we did a great job with that. The offering risk, I saw that there was some. And that was kind of enough for
Yeah.
me to be like, I don't usually swing biotechs. I don't usually swing, low float, small caps, like these types of names, right? So I swing a lot of names, but this is a little bit outside of my wheelhouse. Let me just nail the intraday trade and go home. And
Yes.
of course they did
An offering.
an offering right after the close.
Just like ABBX did after their day one, which is funny with the analog there.
Oh, that's
Because
right.
you kind
They
of could
both
get an
did.
idea. They did the same, and it kind of just shook it off, ABBX.
It shook it off, and
Yeah.
you could see it drop. There was a little bit of volatility, and then it just held there, reclaimed.
Yep.
And it was like after that, it was probably a no-brainer that this is going to go higher. But that was kind of funny. I had to laugh at myself. I'm like, I just
Of course.
I chose not to swing this because they could drop an offering. They dropped an offering, and then it went higher. So
Yeah.
there's some nuance to these, I think, in terms of like understanding the overnight risk, and that's like another area where I think if you're going to swing it overnight, you really want to understand those things.
You need to. And I was thinking the same way. I remember on that day, we just nailed a great risk to reward intraday trade without fully knowing the story behind it and having a real like great grasp on the valuation. Like it's hard to say, I made a great trade to 50. Like you're trying to swing it with then wider stop, trying to make a move to 80. And then there is a point where you start thinking of the risk to reward and does it make sense to hold this overnight? And that's kind of what deterred me. And that's an area I think, I would like to improve on. Shane made an awesome swing on this. It ended up trending about 4 or 5 days straight up, which was great.
It was good.
Yeah.
And I mean, you can just keep like 10%. Right?
Exactly. It doesn't have to be the full, like you're going to take off some of the momentum on that intraday move. You have to
just keep a piece, swing it, see what it does. Like that's kind of how I got into swing trading initially was, I would just keep a small piece of some of my breakout trades and, just enough that I wouldn't lose sleep overnight. And you start to get a little experience with that and you start to realize like the amazing risk reward that can generate. And, from there, it just kind of snowballs.
Do you have anything else to add on this one?
No, man, that's it. That's all I got. That's the classic SMB Capital trade
Classic.
in QURE. So, well, thanks everyone for listening as always, and until next time, stay safe out there.